every post-halving cycle, Bitcoin does roughly the same thing in the final year of the post-halving cycle. You generally get this big correction sometime in the summer, and generally it tends to 10x from there. So that's normal. If I look at the log chart projections, it gets me out to about 400,000 maybe on the upside by the end of the year, March of next year. Stock to flow ratio gives you the same kind of thing. So everything kind of suggests that. It looks crazy now, but Bitcoin's a crazy market, right? It's not like it's a bunch of retail passing a bag to each other. It's actually real investors with real size buying every dip. And it's like, and most of them still haven't onboarded yet. So they've got all these institutions, they take fucking forever to get themselves set up. But once they get there, they will allocate capital over time. So all I know is there's more capital coming.
You mentioned that you think it's going to go up again, and you sound pretty bullish, and you don't sound like this is the beginning of a long crypto bear market like the one we just went through. Why is everyone still so bullish after we've broken through every technical indicator? We've gone down a hell of a lot. We went down 50% on Bitcoin, and we've just recovered. Why is everyone so positive that we're still in this raging bull market?
It kind of is still within its logarithmic trend. So it's kind of just moving around within the range once you look at it in a log chart. So that kind of works for me. Also, you know, all of us got in the background the stock to flow idea and a whole bunch of other cycle stuff, and just kind of general technicals just suggest that it's just a correction mid-market. And in this year, if this is supposed to be the big year, then we should see some of these moves. And for me, I love these corrections because they're out of the way. Because then you can think, oh, okay, fine, don't need to think about that again. So we should, you know, it should just continue higher over time. So, you know, again, my projection for Bitcoin for the end of this year is north of 250,000. So I think we've got a lot of action to come.
At no point did you have any concern? For you, it was like, okay, market's coming down. I'm a long-term hodler anyway. I'm not trading in and out.
No, because look, you know, everyone's heard me bore on about this all the time. Wall of money, right? It's not like it's a bunch of retail passing a bag to each other. It's actually real investors with real size buying every dip. And it's like, and most of them still haven't onboarded yet. So they've got all these institutions, they take fucking forever to get themselves set up. But once they get there, they will allocate capital over time. So all I know is there's more capital coming.
Because the institutional wall of money is not going into Ethereum yet. The easy trade is follow the money. We get to front run a wall of money. Now with Ethereum, we don't know that that's coming. It has other things that will drive the economics, and the Bitcoin price rising is one of them. So Bitcoin itself is, and I've been talking about this, is basically eating every other asset class for lunch. It is outperforming everything. It's even outperforming Amazon now. So anybody who's running a portfolio that's discretionary, or even personal investors, high net worth, family offices, they're all looking at themselves thinking, why do I even own anything else? And that's the conclusion I got to almost, is why even bother? You know, because Bitcoin itself, yes, it's a very volatile asset. Yes, we're going to have 30 or 40% pullbacks, but you get compensated so well for the risk in terms of the reward you're getting from it, that it seems to be worth the risk, which is why I'm irresponsibly long. All I'm hearing every day from every contact is institutional money. And what's fascinating is once you look at the supply of Bitcoin, there's about 900 a day come onto the market from the mining. Most of that is being absorbed between Grayscale, PayPal, and Square. Now, at the rate PayPal and Square are growing, they're going to take the entire new supply out of the market. Against that, you then look at what is happening to the coins that are in the market, or they're coming off exchange. People are putting them into cold storage. So there is no supply. I have literally never seen a situation like this before, where there is no supply coming into the market and demand is going up every day because institutions are coming in. So I think we're at the early stage of something that's potentially much bigger than any of us actually think. And that is almost a little bit terrifying. I've never seen a market with this supply and demand imbalance before.
So every post-halving cycle, Bitcoin does roughly the same thing in the final year of the post-halving cycle. You generally get this big correction sometime in the summer, and generally it tends to 10x from there. So that's normal. If I look at the log chart projections, it gets me out to about 400,000 maybe on the upside by the end of the year, March of next year. Stock to flow ratio gives you the same kind of thing. So everything kind of suggests that. It looks crazy now, but Bitcoin's a crazy market, right?
It is an over-leveraged market, but it's different. I mean, I know it's over-leveraged because the guy who cuts my hair, young Filipino guy in the Cayman Islands, him and all his mates are wildly punting, 25x, altcoins. And I'm like, wow. So that's fine. But what's different about it versus the traditional system is it's kind of over-collateralized. So everyone gets stopped out, they laugh about it. It's very typical of the space. People but basically joke about it. You see it all over, Reddit as well. People find it funny. They kind of understand the risk they're running. So it's not like dumb retail who don't understand the risk. They know it's a punt and it's a mad punt, but if they get it right, they can make some good cash. So I get it, but it's also not systemic in the risk, because it's not like massive whales with huge leverage that then seeps into the banking system. It just doesn't work that way. So it's actually a lot better, a lot easier. So leverage is going to be a feature of this market, but it means we get a lot of volatility, which is also good, because if you know where you are in the trend, you can be a buyer or a seller and take advantage of it.
You have a call option on the future of the financial system and the network effects and a store of value at the same time. There's never been anything like this before. No asset has existed that looks like this. I've been running portfolios for a long time, and all I'm trying to get expressed within this view is this is the biggest, best single bet I've ever seen in my career, of every asset I've ever looked at. No other asset has an upside of 5x, 10x, 20x in a short space of time. Nothing. It's a once in a lifetime opportunity we're being given. If I was a conservative, I'd say 150,000. If I'm to be realistic, knowing what I know about the flow of funds, I think I have a feeling that Plan B's model is going to underprice the upside. I know everybody thinks on this cycle the price will be lower. I just don't see it, because the amount of money coming into the space. So I actually have a feeling it might be above his target of about 250,000, but I don't know. But I like that optionality. Worst case 150, best case north of 250. I mean, find me another trade in the world that looks like this.
It kind of is still within its logarithmic trend. So it's kind of just moving around within the range. Once you look at it in a log chart, it's a bunch of retail passing a bag to each other.
Because the institutional wall of money is not going into Ethereum yet. All I'm hearing every day from every contact is institutional money.